Hiya, guys. Hope you're well. Welcome to another podcast, Finance for Founders. That's right, Finance for Founders is our podcast. My name is Samuel Ajala. I'm your host, and today we're joined by a special guest who goes by the name of Brian Harvey. And Brian himself, he's a SaaS pension consultant. Uh, Anything around pensions and even properties. And specifically, we're going to be speaking about that today. We're going to be having a conversation about how you can utilize SaaS pensions to start your property journey. And with that being said, I'd like to invite our guest, Brian Harvey. Brian, you are welcome. How are you?
Hi, Samuel. I'm very good, thank you. Yourself?
I'm very well. Thanks for asking. So, Brian, tell us a little bit about you and what you do.
Okay, I'm a SaaS pension consultant. SaaS stands for small self-administered scheme. It's a very sort of a specialist type of pension scheme that's used for investors. I'm actually not a lifetime pensions person. My background was in the software industry, and I came to SaaS pensions through using one myself in property investment projects. When I'd done a few projects, I started to speak at property meetings about what I'd done, and this kind of developed into quite a lot of presentations. And eventually, I got picked up by the SaaS pension industry, who said, you seem to understand this. Come and work for us. So the last few years now, I've been working as a SaaS pensions consultant, and it gives me a slightly different angle to most people in that industry, because I've got more in common with the people who are trying to use it for investment in property, because that's where I've come from myself.
Fantastic. So, what you've mentioned, you were picked up because of you understand it and you've used it. Give us some examples of what you've actually done in terms of pension and how it's benefited you.
Okay, well, I set my SaaS up about 7 years ago, and I applied for the SaaS for my company, and then I transferred some other pensions that I'd had from previous employments. And I then did a project. My first project was a commercial property project that I did using the SaaS. Now, one of the things a SaaS can do is it can buy property as long as it's commercial. It can buy land. It can also lend to your limited company, and it can lend to third parties. But the first project I did was actually in the SaaS itself. The SaaS bought the property. And it was a couple of units in a town centre in Lancashire. And these units were quite big. Altogether, it was about 6,000 square feet. And that meant that the business rates on the two units were pretty high. And for that reason, they hadn't been occupied for quite some time, and they needed some TLC. So the pension scheme paid £130,000 to buy them. Now, because it owned them, it pays for everything. It pays for the acquisition costs. It pays for any bills that you incur when you first own the buildings. But it also paid for a remodelling project. So altogether, it spent another £120,000 remodelling these two large units to turn them into 6 smaller ones. And that meant that each unit came under the threshold for business rates. So I now had 6 nice new units, newly refurbished, and they were ready for occupancy. So I was able to get 6 new tenants in there quite quickly. The £250,000 spend resulted in a revaluation of £400,000, which put the value of the pension scheme up. And it also generated £40,000 a year in rent that was going into the SaaS. So the SaaS was now growing by £40,000 a year as a result of that project.
Wow.
So, that was an example. That was my first project. It was very useful for me at my age at the time, because if I go back to what my objectives were, I was trying to change my working life at the time. I've been working in the software industry, and I was traveling an awful lot internationally, and I've been doing it for a long time.
Yeah.
So I was trying to change my own working life at the time. Now, when the pension scheme increased in value, I was just coming up to the age where I could actually take a 25% tax-free lump sum out of that pension scheme and put it into I actually used it to put into my limited company as a director's loan, so that I had money for refurbishments and so on. But then also the £40,000 a year that was going in rent, I could, if I'd wanted to, start to draw that out as a pension because I was the right age. Now, of course, that suited my objectives at that time, but there's many other ways of using a SSAS which could have suited me if I'd been maybe 10 years younger, when I wasn't pension age.
So when you receive your rental income, right?
Yes.
And you begin to pay that, who does that belong to? Does that belong to the pension itself? Does that get paid to your limited company? Who does that
No,
belong to?
it goes into the pension scheme. In that scenario, it goes into the pension scheme.
Fantastic.
There are lots of other scenarios where you can actually structure that differently.
Please explain that to me. What are some of those scenarios?
So there's a multiple projects that I've seen recently where a SSAS buys a commercial building and your own limited company takes out a lease with the SSAS. So I've seen examples, for example, where maybe the SSAS buys a building that's worth £300,000 and the fair market rent for that building is £30,000 a year. So you set up a lease where your own limited company pays the £30,000 a year to the SSAS, but it then makes use of that building for multiple occupancy, commercial multiple occupancy. So it might have a part hotel on some floors. It might have flexible office space, a canteen, a gymnasium. It might rent out the parking spaces. So the limited company, the OpCo, is making maybe a six-figure profit. And that money is not in the SSAS, that money is in your operating company. So the SSAS is getting a fair return for its investment in terms of the rental it's receiving, but the limited company, the OpCo, is actually making a good profit that you don't have to wait to get to pension age to benefit from. And of course, if it makes a lot of profit, maybe you put some of that money into the SSAS, to offset your corporation tax.
How would they differentiate it? How would they differentiate what belongs to the SSAS and what belongs to the company?
It's quite straightforward. So if you think of the SSAS almost as in this case, the SSAS is like the property company and the limited company is like the operating company.
Okay.
The SSAS owns the property and it has a straightforward lease which says the fair market rent for this property is X, and that's the amount that gets paid to the SSAS.
Okay.
Any money that the operating company then makes over and above that belongs to the operating company.
Fantastic. So it's like a salon in a commercial building. The business owners may have it on a lease, pays the rental income to the owners of the property, but they take whatever profit from the business that they're actually operating through the building itself.
Yes, of course, yeah. So that's an example where you're making money. The pension scheme is getting a good return, but you're using an asset owned by the pension scheme to make money outside of the pension scheme in the operating company.
Fantastic. So can I ask what the journey looked like in terms of actually getting your SSAS pension out? You went through the company, through your pensions. What was the journey like to actually release the funds, the funds from your pension itself?
Okay, so first of all, you have to apply to have a SSAS. You have to apply to HMRC. And that's because it's an occupational pension scheme. It's not a personal pension, it's an occupational pension scheme for your company. So first of all, you have to have a limited company. It has to be operational. It has to have a trading element to it. They don't like it if it's just an investment company. And you apply to HMRC. They take about 3 months to take a look at it at the moment. That does vary, but at the moment it's about 3 months. They're looking at the company. They want it to be an established company that's trading. If it's published accounts, that's great. If it's not quite old enough to publish accounts, they'll be asking for 6 months of bank statements to show it's trading. They will then look at you as a person, or you can have up to 11 people who are members of the SSAS. So they will look at those people and just make sure that they're fit and proper. And that's mostly looking at making sure they've not been struck off as directors and that they're not currently bankrupt. So they're spending more time looking at the company really rather than individuals to make sure that it's suitable for a SSAS. Once that's been approved, then it's a matter of setting up the SSAS bank account and then starting to fund it. And people fund it in one of two ways or both. So the first way is they transfer pensions in, so pensions from previous employment, which is part of what I did. And then also they can put in contributions up to £60,000 per annum per person out of the company's profits, and that will be offset against the company's profits, so you don't pay corporation tax on that money. Legitimately don't pay corporation tax on that money. And of course, the investments that are in the SSAS grow tax-free. Any rental that's received into the SSAS is not taxable. If you sell the property in the future, there's no capital gains tax to pay. So it's a nice tax-free wrapper that's a very legitimate way of not paying too much tax on your investments for your pension.
That's fantastic. I was going to say to you, if I had a group of friends that we wanted to combine pensions and we wanted to put a project together, is that possible? And how does one possibly go about doing something like that?
Okay, well, I've got two main answers to that. The first thing is, if you're all part of the same company, you could start a SSAS where you're all part of the same SSAS.
Oh, wow.
And you could transfer your pensions in. Something to be aware of, though, if one of you has a lot more in their pension pot than the others will, then that pot will continue to grow in proportion as your investments make money. If the whole pot grows 10%, but your part of it is 80% of the pot, then naturally you're going to make more money than your colleague.
Of course.
Whereas if you're working together in your limited company, you're probably doing investments where you're expecting to make equal amounts.
Yeah.
But that won't happen in your pension scheme. There are one or two ways around that, but they're quite complicated. So that's one way you could do it. Alternatively, if you're working with people who had separate companies and therefore separate SSASs, the SSASs can do joint ventures together. So a SSAS can own 50% of a building, and the other 50% could be owned by another SSAS, or by a limited company, or by someone else's limited company. So there's various ways in which a SSAS can joint venture.
Wow, that's amazing. So the reason I asked this, there is a lot of people where we talk about property investment, commercial, and a lot of people mention they don't have any funds to invest, but in actual fact, they have a pension and they have access to a SSAS as well.
Yeah.
So this is one of the reasons why I asked this question, because it's actually a very common question that comes about how individuals can pull their finances together to begin to buy commercial properties. I think one of the things I would do before here is get you to put your details down and where people can get you from, because I know that a lot of our viewers are very, very interested in this particular area as well. So website, emails, and what we would have it in, we will have it on our description as well. Everything concerning you, so that if anybody needs to get in contact, emails, websites, or anything else like that, we will get that communicated to our audience.
Okay.
The other thing I was going to say is, can you discuss the contribution limits for and the tax advantages that come with it?
So the contribution limits are currently £60,000 per annum per person. So if you've got 3 directors, all members of the SSAS, they can make £60,000 each per annum per person. Now that money does need to come out of the company profits for this year, because it needs to be offset against the corporation tax.
Yeah.
Offset against profits for reasons of corporation tax, I should say. Now you can go back to last year, the year before that, and the year before that. To qualify for that, you need to have had some form of pension during those years, even if you weren't contributing. And you can use up any unused contribution allowances from those years. So last year was also £60,000, but the year before that was 40, and the year before that was 40, because the contribution allowance changed. In order to do all of that, though, you can't claim any tax back from previous years. It needs to come out of you need to have profits in this year to be able to use those contribution allowances. So yes, an individual person could put in maybe £200,000, as long as there's sufficient profit in the current year to offset that against.
Fantastic. You've mentioned investments that can be done. We've focused a lot on commercial properties. Are there any other restrictions that a trustee should be aware? And also the role of a trustee. In fact, my first question, what is the role of a trustee within the SSAS, and what other investment opportunities outside of commercial properties can one do as well?
Okay, so trustee, the members are also trustees of the scheme, and they have a responsibility to the beneficiaries to make sure that the SSAS is operated in a prudent manner.
Yep.
And they also have responsibility to make sure that they're doing due diligence on each of the investments that are being made, and they're all responsible. So you can't have a situation where one of the trustees is making a decision to do something without the agreement of the others.
Yeah.
Now, sometimes you have a professional trustee as well, and in that case, they also have to sign off all the investments.
Can a trustee can also be somebody outside of those that are actually doing the investments together? So three friends could come together, they do the investment. By default, all three of them are going to be trustees.
It's okay. Yeah, the member trustees of the scheme. Yes.
Okay, and they can also have members beyond that who are also trustees that are not actually part of those taking out the investment. Is that correct?
They can have a professional trustee. So
Okay.
some administrators also provide a professional trustee. What you will find, though, Samuel, is in most cases when they're making that investment, the professional trustee will ask the member trustees to sign a waiver. And the reason for that, of course, is that the professional trustees are not property experts.
Mm.
They can't, they're generally speaking, they're pensions people, and they can't really comment on whether a particular investment in a commercial property is a good investment. That's not their expertise, but they do have to agree to each investment. And the role of the administrator and professional trustees is to make sure that the pension is operated in a compliant way and doesn't break any of HMRC's rules.
Fantastic. My next question now would probably be around the pros and the cons of investing through a SaaS compared to the advantages compared to other investment options. Just the pros and the cons, really.
Okay. So let me give you an example where I could have bought. I owned a small hotel in my SaaS, and it's commercial property. It was it was an investment the SaaS was able to make, and by buying it in my SaaS, it also meant that the SaaS would pay for any refurbishment work. Now, I could have also bought that property in my limited company by borrowing the money from the SaaS. It was within the limits that I could have done that. It was less than 50% of the value of my SaaS, and you're allowed to borrow up to 50% of the value of the SaaS into your limited company. I could have done that. The pros and cons in that situation: if I bought it in the limited company can make a claim, capital allowance claim. So if people listening know what a capital allowance claim is, it's a claim against future tax for the cost of the equipment and fixtures and so on that have been installed in the property to make it, give it the commercial use that it's used for.
Yeah.
And in the case of a hotel, it can be quite substantial. Now, a SaaS can't make a capital allowance claim because it's not a taxpayer. So it can't claim against future tax because it isn't going to pay any.
Yeah.
So the pros and cons, I had to make a decision. Do I buy it in a limited company with a loan from the SaaS and then I can make a capital allowance claim? Or do I buy it in the SaaS where it can't make a capital allowance claim, but then the SaaS will pay for the refurbishment?
Yeah.
So I had a decision to make. Now, I would say that's something, I'm not by any means a capital allowance expert, but it's something to think about when you're buying commercial property. And I've actually seen people do it where they buy it in the limited company initially, then they make the capital allowance claim, and then subsequently sell it to the SaaS. So yeah, there's pros and cons of all the different ways of investing. And there's also people who would tell you that, commercial property is not their thing, and they'll invest in the stock market. They'll invest maybe in unlisted shares of companies as well, which a SaaS can do.
Yeah.
In some administrators will let you invest in crypto and Forex and so on, but we're very careful about that. We think they're a bit too risky for our investors. But options trading and things like that. So there's a whole host of things you can do with a SaaS. And of course, you can lend it to third parties as well, given the right security.
You can lend it, did you say?
Yeah, the SaaS can lend to third parties. like angel lending. Like people in the property industry will talk about angel lending.
Yeah.
So it's like doing angel lending, but it's coming from the SaaS.
Fantastic. I'm going to ask just deviate very slightly. You mentioned properties commercial.
Yeah.
Obviously, the SaaS doesn't relate to residential properties, developments, and things like that.
No.
Mm, and that also includes developments as well, right? Yes, it's even development of residential. Is there a line it crosses between commercial and residential?
So there are various times when people question whether something is, fully commercial or not. When I bought my small hotel, it did have a room at the back, which was used as an office and had an ensuite bathroom. It was considered to be owner's accommodation, and therefore it had a council tax bill. So on a case-by-case basis, I would always run those past your administrator. Even with my experience of SaaS, when I bought that property, I had to go to the technical team and say, is this okay? And they deemed that it was, and it was fine. There's other things people say, can we have service accommodation? Well, no service accommodation generally is residential. You can have certain types of residential property if it's used in a care format. So, children's homes, old people's homes, homes for former addicts, homes for people from a services background where they've got PTSD maybe. I've seen all these examples. But there has to be an element of care provided on the premises for it to be compliant. So yeah, there's certain areas that you have to look at in detail to make sure it's compliant.
I was going to ask you to share some success stories, and I think that even in your success stories, one of the things I will ask you honestly is, SaaS is specific to commercial, but if all things being equal, what would be your ideal property strategy in 2024? I was speaking to John Howard previously from Property Elevator. I'm not sure if you know John Howard from
No,
Property, and he actually had a lot to say about the different strategies that are now available. So I wanted to get your thoughts. All things being equal, SaaS wasn't only limited to commercial units. What would be your strategy for 2024 in terms of property?
Okay, so you have to bear in mind that I'm more of a SaaS pension consultant than a commercial property guru.
Okay.
There are people that I would refer to if I wanted to answer that question. I really like the commercial multiple occupancy model that I mentioned before, where the SaaS owns the property, and you take out a lease in your operating company, and you use the property to generate income from flexible office space, a parts hotel, canteen, gymnasium, etc. Now, if I wanted to do that, there are other people I would refer to as the experts in it. So there are people I can recommend in that case. I've also seen people do commercial to residential using a SaaS, and there's a way of doing it. You can, if you've got a commercial property in your SaaS, you can use the SaaS funds to start doing a conversion to residential, but you have to actually sell it to a limited company or elsewhere before it becomes habitable. And that usually means that people don't put the bathrooms in, for example. And then they at that point they use a specialist bridging loan to purchase it from the SaaS, and then they complete the conversion and refinance it. And in that case, what you've done is you've used the SaaS funds legitimately to add value to a property that then ends up in your limited company. So the income for that then, of course, is accessible to you long before pension age. What else would I say in terms of commercial property? I mentioned the project I did earlier, where I ended up with the 6 nice units. Now, of course, they were retail units, and I wouldn't necessarily recommend that to people. I didn't need to refinance them because the SaaS owned them 100%.
Okay.
But if I'd tried to refinance them, refinancing retail units is quite tricky. They want you to have long leases in place, maybe 7 years, and the lenders also want to see good covenants on the actual people who are your new tenants, rather than being maybe a hairdresser's and a vape shop and so on. They're looking for, McDonald's or Betfred. So yeah, that's a challenge with that. I wouldn't necessarily go for shops. What I do see working well at the moment is industrial units, storage units, and of course the multiple occupancy, which I really do like.
Fantastic. In terms of storage units, who would be the occupiers? Who would be those that would be leasing or renting it off you?
It's very often tradesmen who need somewhere to lock up, tools and equipment. And very often the storage units I'm talking about are just trailers on pieces of land.
Yeah.
So I've seen people doing maybe the commercial multiple occupancy model that I mentioned earlier, but they've got spare land to the side and they get some trailers and make use of those, and they get a good return on them.
Fantastic. So what do you think the future is like for shopfront businesses as commercial units? I think you mentioned just a moment ago that that's not what you prefer. You prefer not to do that. But what do you think the future looks like for some of these shopfront commercial units?
I did it and it was fine. And I guess one of the things that concerned me was because of the size of the investment, it ended up with being one row of 6 units all on the same street. It wasn't very well diversified. And that really hit home to me when COVID started and we had the lockdown and all the shops closed.
Yeah.
I started to think, well, that £40,000 a year I've got coming in rent might disappear. Now, fortunately, it didn't, because they all got grants and they never missed payments. But it did make me think about, how to diversify my portfolio going on from that. So
Fantastic.
I wouldn't say there's no future. I'm not someone who can talk about the economy to a level where I'd say there's no future in retail units. I would just be careful not to be too reliant on it.
Fantastic. So that leads me to my next question, which is quite similar. Is that what are your thoughts on the current commercial property market? Any trends to look out for? Any patterns, especially for somebody that wants to do this for the first time?
Okay. If you're doing it for the first time, so here's an important question that I always ask Samuel. I'm always looking at, if someone wants to set up a SaaS, what are their objectives? How old are they is an important factor as to what strategies they're going to use. But also, what are their skills, experiences, and appetite? Because, for example, I have clients. I've got accountants, for example, who are using their SaaS to buy the office they work from. That's a perfectly sound investment. They're going to pay rent into their own pension scheme in the future instead of paying to a landlord. That's a fairly passive investment. Over a period of 10 years, the SaaS will probably get all of the money back that it spent on buying the building in rental income. So looking forward 10 years, it now still owns the building. It's had all its money back, and hopefully the building's got up in value. But that person's not actively tried to grow their business using their SaaS. It's a passive investment for somebody who needs to buy their own property. I've got clients who are farmers, and this is a great model. So they have a lot of commercial property that they own in their limited company. In their SaaS, they've transferred some pensions in there, but they're also, because they're quite profitable, they're making the maximum contributions every year. So 4 people probably put in £60,000 a year each into the SaaS. They're not paying corporation tax on that money now. As soon as the money hits the SaaS, they use the SaaS to then buy one of their own commercial properties from their own limited company and put it into the SaaS. And the money goes straight back to their business, which has highly seasonal cash flow and really needs the cash.
Yeah.
So now they've got the property in the pension scheme. They're paying rent to the pension scheme for their business, which is also tax deductible. And over the course of their coming years, they will try and move all of their property into the SaaS, so that when they want to retire and sell their business, that farming business is easier to sell when it doesn't own all of the property. And they'll continue to receive rent from the new owners into their pension going forwards. So that's a really good use of a SaaS.
It is.
In terms of commercial trends, I think I've already mentioned them. I see, people doing well with industrial, commercial multiple occupancy. I'm seeing a lot now. Probably less so shops.
When you say commercial, Sorry, when you say commercial, you mean like proper office blocks?
Yeah, so the
Or you said,
commercial multiple occupancy ones I've seen. Some of them are buildings in maybe a business park. Others have been like maybe an old mill in the middle of a town centre.
okay.
There's a guy who does a very good podcast, a Scottish guy called Jerry Alexander, and he specialises in this. So he's worth looking up. So you visit those buildings, they're being used, as I say, there might be an apart hotel, there might be flexible office space, canteen, gym. And so they're commercial buildings, but they're not shops. A lot of people jump straight to the idea of shops when they think of commercial. And they think, oh, we don't want to own shops. But there's lots of other types of commercial buildings.
Yeah, yeah, fantastic. And I'll ask as well, what is your advice for somebody that's undertaking this for the first time? Now, I know I asked a similar question before, but more so around mindset, because I'm sure everything you've said to me right now is a win-win. Win-win. I can't even see where any of the faults, but I'm sure that even though you've presented it to people, it's a win-win. People don't get over this mindset of it must be a trap. There must be some kind of issues in the long run. I'm not prepared to take that risk with the money that I've built up in my whole career through my pensions and so on and so forth. How do you overcome those objections?
So, to be honest with you, to be really honest with you, I wouldn't try and overcome those objections. SaaS isn't right for everybody, and I never try and sell it to people.
Yeah.
It's more a case of wanting them to know, that I'm available if they are the right person for a SaaS. There is an important mindset thing. If you take somebody who's just been on a property training course and they set up a SaaS and they move £500,000 in there, all of their careers, that £500,000 that's been building in their pension pot has been looked after by somebody else. All of a sudden, they've got to make the decisions on how to invest it. And it's a little bit of a rabbit in the headlights moment sometimes.
Yeah.
So what you're really looking for is properly established owner-managed businesses, people who really are business people and know what their plan is going to be and how they're going to add value. So yes, I wouldn't try and overcome those objections. If it's not right for someone, it's really not right.
Fantastic. I really appreciate that. And also, in terms of SaaS, what other resources, books, websites would you recommend for some of our viewers in order to gain more knowledge? I think sometimes some of people's fears really is because of lack of information,
Yes.
where they get confidence with the more information they know.
Yeah.
So any of our viewers wanted to read up more and get more information about this, where can they possibly find more information?
Okay, so I'd start by saying that our website, I work for Retirement Capital. We're a SaaS administrator. Our website is www.retirement.capital. There's no .co or .uk on the end or anything like that.
Yeah.
We have a resources page there. It can tell you a lot. There are books on the subject. Mark Stokes wrote a book about SaaS pensions. But I'd say the most important thing to do, if you want to understand SaaS and what people are doing with it, is go to a local networking meeting. There's meetings all over the country. If I work down from the top, there's SaaS Scotland, there's SaaS Northwest, there's SaaS Leeds, SaaS Birmingham, SaaS Dragons in South Wales, SaaS Southwest. There's a couple in SaaS London. And then there's the SaaS Experience Network, which isn't geographically based. Now, all of these groups have got, if you go to these meetings, you'll find half the people in the room have got a SaaS and are deploying it. The other half are interested in SaaS. Some people are looking for joint ventures. Some people are looking for investment opportunities. Those meetings, which run monthly or every 2 months in some cases, are an absolute goldmine of information. That you'll learn more from those meetings than you will from probably reading a book or looking on the web, because you'll see real stories of what people are doing.
Fantastic. I have another question for you, actually. This may be somewhat controversial.
Okay.
Where has it ever gone wrong for you?
So the thing that does go wrong for people sometimes, and I'll be really upfront with you about this because I think it's really important. When people do third-party lending, the rules that HMRC impose about security are not necessarily going to protect people from themselves.
Mm-hmm.
When you lend to your own limited company, the rules are very strict on security. When you lend to a third party, it says it needs to be commercial, prudent, and secure. And you could argue the word prudent, which means you're acting in the interests of the pension scheme, means that you should be looking for good security. But there's nothing specific in those rules about what that security should be. Now, at Retirement Capital, because what we've seen happen in the past, we do impose quite a strict rule ourselves about having to have very good security for third-party lending. But there's been cases where people have lent money to quite large companies in some cases, and there have been well publicized failures where people have lost money from third-party lending. So it's always important to think the first thing you want to do is make sure you get your return of your investment before you start thinking about the return on the investment. You want to make sure you'll be getting your money back. So there's plenty of opportunities if you want to do third-party lending to get a first charge on a property, and a lot of people don't realize this, you can get a shared first charge by doing a syndicated loan with other SSAS investors or other angel lenders, where you're sharing the first charge, which is much, much better than having a second charge.
You mentioned third-party lending. Could you just elaborate on that a bit?
Yeah, so there's two types of lending from a SSAS: lending to your own limited company or lending to unconnected parties, third parties.
Yeah.
So I could lend money to you from my SSAS, for example, for a property investment that you're doing.
Yeah.
And what I'm saying is that HMRC's rules for that don't protect me very well if something happens to your project.
Yeah.
So we impose further rules on top and say, look, it's better for me to make sure that when I lend you that money, I've got maybe a first legal charge over the property that you're working with.
Fantastic. Is it common within the industry for people to have create like a fund, right? So you have a property guru or property developer advising people to invest in his fund through their SSAS pension. And I believe this is an example of a third party that you discussed just now. Right. And he's inviting people to invest into his fund. He now invests those funds successfully, and then give those who had actually invested returns on their investment. Is that something that's quite common within the industry?
Are you talking about, when you say a fund, you mean somebody investing in stocks and shares through their own fund? Is that what you mean?
No, somebody who's into commercial property.
Okay.
And he has had a conversation with 5 different people.
Yes. So
encouraging them to set up a SSAS so that it will pour it into his. It may not be his, it may be shared, but ultimately he's going to be the one responsible for the investment of all 5 people, and he'll give them terms of when to expect returns on their investment.
Yeah. So this is what these unconnected party loans are for.
Yeah.
So it's usually people lending into a property project, and when it's more than one person, we usually set it up as a syndicated loan. And we've done that even where, people might have SSASs with different administrators. So it might be that a couple of them are with Retirement Capital, and then there's 1 or 2 in other administrators. But we're able to work with the other administrators usually to make sure we can set up a syndicated loan that has very good security, secured against the project or the property that the loan is for. And as I say, in our case, in Retirement Capital's case, we do insist on very good security for those loans because they can go badly wrong.
Fantastic. If one of my viewers came to you, Brian, and said, I've got a pension, I want to open up a SSAS, transfer it into a SSAS and begin to invest, are you able to assist them right the way through the journey?
Yes. Yeah, we do the whole thing from the beginning of, understanding what they're trying to achieve, doing their application process with HMRC for them, helping to set up the bank account, and then transferring other pensions in. And, I speak to my clients certainly in the early days once a month whilst they're getting to the point where they've deployed their funds, and then as often as they want me to after that. Because it's making sure, but it's really important to me at the beginning to understand what they're trying to achieve, because what I don't want to see is someone setting up a SSAS and then saying, right, I've got a SSAS now, what shall I do with it? And you do see this on Facebook. You'll see people saying, I've just set my SaaS up, I'm wondering what to do. Well, that's the wrong way around. You should have an objective when you're starting before you set the SaaS up. Because like I say, it's not right for everybody. It shouldn't be just something you buy off a shelf. It needs to be thought through, and there needs to be a strategy that's based on their objectives and their age and their appetite and their experience.
Fantastic. And before we round up as well, do you have any last thoughts, wisdom for our viewers? Just some from your experience, some thoughts, some wisdom, and that you can impart to some of our viewers before we end.
Well, that's an interesting question. I have to delve back into everything interesting in my head to get to answer that. I think the important thing here is you've got to make sure you're going to get a good return. We do a thing called a SaaS Lite. And SaaS Lite, it's still a SaaS. As far as HMRC is concerned, you've applied for a SaaS and you've set it up. What we're doing with a SaaS Lite is making it affordable for people who are starting with a small pot. But by doing that, we restrict what they do to keep our admin costs down. So they can only invest in stocks and shares whilst they've only got a small amount, and whilst they're growing it. Now, there's only any point doing that if your company is going to make sufficient profits in the coming years to make the contributions that will offset your corporation tax to grow the pot to a suitable size. So last week I had somebody asking me if they could start a SaaS Lite. They didn't have a good contribution strategy in place. They were going to start with £20,000. Now, £20,000, if you invest it in the stock market, let's say it makes 10% if it does well. So it's made £2,000. The cost of running the SaaS means that isn't worthwhile, and it's not sensible for them to do that. So you've got to think through your whole contribution strategy, whether you've got other pensions to bring in, what you're trying to achieve, how old you are, all of those things. It's important, but it is a case-by-case basis. So what I'd say to people is, I get lots of discovery calls with people who, are not yet ready for a SaaS, who are not, don't yet qualify for a SaaS. Maybe they haven't got a limited company in place yet, or maybe it's not been trading for long enough. There's no harm in having a chat. I'm always happy to talk to people and see whether it suits them.
Fantastic. Brian, you are an absolute legend. Thank you for your wisdom, your expertise on this particular subject. And for the rest of us that are listening, please, the details of Brian will be down in the description. Please reach out to him. I think that this is a relevant platform that should be utilized if it's suitable for you. This SaaS pension and investment into commercial units. Once again, Brian, I really want to thank you for your time, and we shall speak soon. You take care, Brian.
Thank you very much, Samuel. Thank you. Bye-bye.